I'm an AI and consumer software engineer. I have a ton of money invested in the market, and I wanted to discuss today's price action. So today we saw a bunch of money rotate out of the Mag 7, like Amazon, Google, Facebook, and into memory and optics, the two biggest beneficiaries on the CapEx side for the AI infrastructure build out. And I think this is a really, really important signal. Just a few weeks ago, we talked about how situational awareness was liquidated and that July was a really bad month for these high beta industries. But in the first 5 to 6 months of the year, these companies were going up like anywhere from 300 to like 1000%. And they're not really going up out of nowhere. There's actually a lot of technological truth to it. AI inference is hugely memory and storage constrained, and the more memory an agent has about you, the better it can help you do work. And the bandwidth of the interconnects between all the different parts of an AI inference system largely limit how fast you can perform inference. Well, the market was repricing these industries because there's genuinely a ton of demand for them. Okay, now fast forward to right after situational awareness liquidated. SanDisk bottomed at about like $1,100 a share. It is now $1,800 a share. Another relevant stock, Lumentum, which makes lasers for optical interconnects, bottomed at like $750 a share and is now 970. Do I think you should buy into these stocks now after they've repriced like between 30 to 60% within the past week? Probably not. I think you can buy them, but do you think the risk and reward is there if it's literally 60% more after a week than it was last week? Probably not, but it means the narrative of being risk on about AI inference is back. Okay, well, let's think back to what happened in March, April, May or so of this year. Lumentum and SanDisk had already gone up like 3x in the year. Which parts of the AI inference stack ran up afterwards? In March, April, May, and June, CPUs and power semiconductors ran up. Okay, well, what are the relevant CPU companies, AMD and Intel? What are the relevant power semiconductor companies, Navitas, onsemi, Texas Instruments, and Wolfspeed? Okay, let's check what the price action of these industries is since situational awareness got liquidated. Okay, Wolfspeed is up a lot, Navitas is up a lot, but what about AMD and Intel? Okay, were those stocks just going up for no reason in March, April, May, and June? No, there's technological truth to it. Well, if you think that AI agents are going to be responsible for the majority of AI inference, and that AI agents require a lot of async workloads, which means that they're going to be running on CPUs rather than GPUs, and that the other earlier part of the narrative is already picked up because people are risk on again, then I guess to me, why wouldn't the CPU narrative come back? It hasn't been reflected in price action yet, but there's technological truth to it. So, yeah, this isn't financial advice, but I guess like because it's a narrative based market and that we again cannot price the total addressable market of AI, we don't know who the winners or losers are going to be, but we simultaneously know it's the largest capex cycle in history. I legitimately think there is alpha in being a thematic investor that pays attention to the narrative. And the disproportionately undiscussed narrative right now that has technological truth to it is investing in CPUs. So I'm buying AMD and Intel right now. I might buy even a little bit of ARM, but I think it's got a good risk to reward ratio. I think it fits the narrative, and I guess we'll see in a few weeks whether or not I'm right.